To keep you updated on the capital and financial markets, here is a recap of what happened.
In light of current developments in the Middle East conflict and in furtherance to the statement by Prime Minister Datuk Sri Anwar Ibrahim, the Securities Commission Malaysia and Bursa Malaysia have increased our market monitoring and surveillance to ensure activities in the Malaysian capital market remain stable, fair and orderly. We would like to assure that our market fundamentals remain strong and our intermediaries are well capitalized. We also have a robust system in place to ensure continuous and effective clearing and settlement of trades. Additionally, we have the necessary controls in place to address potential sharp increase in volatility in the equity market. We will continue to assess the situation very closely to ensure the integrity of our capital market remains intact. A series of weak auctions for U.S. Treasuries are stoking investors' concerns that markets will struggle to absorb an incoming rush of government debt, the Wall Street Journal said. A sell-off sparked by a hotter-than-expected inflation report intensified this past week after lackluster demand for a $39 billion sale of 10-year Treasury. Investors also showed tepid interest in auctions for 3-year and 30-year Treasuries, the report said. Behind their caution lies a growing conviction that inflation isn't fully tamed and that the Federal Reserve will leave interest rates at multi-decade highs for months, if not years, to come. The 10-year yield, the benchmark for borrowing rates on everything from mortgages to corporate loans, finished the week around 4.5%, near its highest levels since touching 5% in October, said Wall Street Journal. The Monetary Authority of Singapore has set aside 35 million Singapore dollars to support those looking to pick up skills in sustainable finance. The suite of courses in this field will be expanded. This is to upgrade the country's financial services sector to meet growing demand in the region. A study co-commissioned by MAS revealed that more than 50,000 professionals will have sustainability-related tasks added to their job scope. There were few positive headlines about ESG and sustainable funds in the last few years. In 2022, the returns of many of these funds were negatively impacted by their underexposure to energy counters and overexposure to technology stocks. In 2023, declining fund flows and a net outflow were recorded for the first time in the fourth quarter. But this is not the death of ESG or sustainable funds. The demand is still there, especially from institutional investors like big pension funds and insurers, says Vincent Mortier, Group Chief Investment Officer at Amundi Asset Management. The problem is the confusion over what these funds truly aim to achieve and whether it is greenwashing. As more regulations and taxonomies are being introduced to govern what kind of funds can be called ESG or sustainable, the value proposition of these funds will become clearer. The Securities and Exchange Board of India will delegate administrative and supervisory responsibilities of research analysts and investment advisors to a stock exchange along with many other non-core functions like approval of advertisements and scrutiny of applications. Once the new norm kicks in, fresh applications for a research analyst will be routed through the stock exchange, and enlistment with the exchange may be a prerequisite for obtaining SEBI registration, according to draft documents seen by Business Standard.
The latest e-Zine is now available for download at FIMM's official website. Download your copy today to keep up to date with what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.